Indeed, I will take this conversation forward with Prashant Tripathi, who is the MD and CEO of Axis Max Life. Mr. Tripathi, good morning. Thank you for joining in. Now, with the kind of year that you've had now in FY25, what are the growth targets that you have penciled in for FY26? If you could shed some light on that first up.
Good morning, Vivek and Yash, and thanks for having me. Firstly, thank you to Yash for his analysis. Actually, my day began reading his notes. So thank you, Yash, for that, for the acknowledgement. I think Axis Max Life Insurance has been on a good journey. And not just last year, but if we were to look at last couple of years, our growth is 18%, which is significantly more, almost double the rate of private average. And for last 8 quarters, quarter on quarter, we have done very well in terms of growth. Our margin numbers also were on the higher end of what I was thinking, which is another good news. Yash is right. We began the year with positivity. And, it's very hard to give an absolute number on growth, but I must share with you that we'll try to maintain 3 to 4 percentage points with respect to the private average growth. So if the private industry grows at 13%, you should add 3-4% more for our growth expectation. And in terms of margin, while we finish at 24%, we'll definitely target a range of anywhere between 24 to 25%, trying to increase it further. We finished last quarter with very good margin numbers, 28.1, and I'm personally very enthused. We took a series of actions to focus on product mix and trying to drive our product mix in a manner so that the margin numbers become better and better. So with all the work that we've done over last few quarters, I remain positive about the next year, and we are going to approach this year also with the same confidence that we did. We finished last year, second half as position number 3 on the retail APE, or retail new business premium in the industry, private industry. And the objective will be to consolidate our position as we go forward.
Prashant, thank you so much for joining us. One question as far as quarterly margins are concerned. Of course, in the fourth quarter, they were much ahead of street estimates. This despite ULIP having its negative impact on the margins for the quarter. Would you say that quarterly margins at about 28-29% is the peak? And what I want to understand is that despite the negative impact which came from ULIPs, what really helped you to take your margins to that 28-29% band?
Yes, if you look at our margins, typically our margins are lower in the first quarter and they pick up as we go along. Quarter 4 generally is the highest sales month where we get the leverage on the business. And hence our margins are typically highest in quarter 4. That's been the trend always. I must say 28% is the higher end of the margin. So you shouldn't expect margins going beyond of that. But your observation is right. Despite having high ULIP share, our margins were good. And the reason for that is our focus on trying to look at other areas of business, especially the category of protection, health and riders. You would notice that our riders have gone up by 270% over last year. So we try to attach more riders to ULIP, hence having a positive outcome on VNB margin. We also did a few things with respect to product variants to try and drive those product variants where inherently the margin numbers are higher.
Okay. Also, one very quick comment. Surrender value, higher surrender value regulations, that kicked in from October. So you've had about the second half, which means about 6 months impact of higher surrender value. On your margins, what was the impact in H2 because of higher surrender value? And now in FY26, what is the quantification of impact that you expect coming from this new regulation?
That's a very good question. And I did mention in quarter 3 that impact was close to 1%. But you know how businesses work, how operating people like me work. We look at the impact, but we then deploy corrective mechanisms to take care of the margin impacts. On a net basis, I will say the impact was less than 50 basis points for the second half of the year because we almost nullified the impact by the corrective mechanisms that we deployed in quarter 4. As we look at next year, I think it should have a minimal impact because, we'll look at product mixes, we'll deploy, certain products which will have inherently more margins. So we'll take care of the impact of surrender regulations on overall margin.
So minimal would be less than 50 basis points?
Yes.
Okay. One question as far as Axis Bank and the distribution there is concerned. What was the counter share at the end of FY25? Also, just to compare, what did you start FY25 with? And now in FY26, what is the optimal or the ideal distribution mix that you would want to see as far as Axis Max Life is concerned?
We are extremely proud of the relationship that we have with Axis Bank. It's a very privileged relationship, not just now, but for now 15 years. And we just celebrated 15 years of working together, which was a very positive, step and a milestone in the journey of Axis Max Life Insurance. Our stated position is we will be between 65 to 70% kind of a broad range of counter share, and suffices to say that we were in that range. We finished around 66% of counter share last year. This was more or less similar to how we finished FY24, maybe 1% up or down. But otherwise, despite the challenges of open architecture with the work, product mix, execution skills that we bring to the table, as well as, of course, support of the bank, we have been able to maintain our counter share.
Okay, now two questions with respect to two important product portfolios. One is with respect to protection. Protection in FY25, that grew at 35%. Do you expect similar rate of growth going in FY26 as well? And the second one is with respect to the ULIP share. The ULIP share was 42% in FY25 versus 35% in FY24. Do you expect this to come down further in FY26? And if yes, then to what point?
That's a very good question. Operating people like me are always very aggressive about growth expectations. I know that there will be base effects working against us, especially on, when we talk about protection, it's protection, health, and rider. Those three put together, we call as protection. We grew at upwards of 35%. On a base, 35% may be more difficult, but I will give a guidance of more between 20 to 30%. That's where we will be on protection. In terms of the overall ULIP mix, of course, increasingly the ULIP mix has been coming down, predominantly because whatever is happening in the market. And I do expect the ULIP mix to fall further from the current level that we finished in FY25.
Prashant, a lot of the market participants, aside of the business, would be wanting to know one very important aspect of the business, and which is, when do you start that process of merging Max Financial into Max Life? When does that get completed? And when it does happen, when do you see the listing of Axis Max Life taking place?
So the listing will become automatic the moment we merge, because as you know, Max Financial Services is a listed company already. So, of course, like everybody else, it is also the expectation and dream of all the shareholders as well as the management team to embark on that journey as soon as possible. I think we're just waiting for some clarity. The Act actually, the bill will pave the path for this merger. And I'm hoping that that happens soon. The moment that happens, we'll begin the exercise of collapsing both the structures. Max Financial Services is a listed company, and hence we do want to make sure that we follow a path where most of the stakeholders are aligned, including the regulators.
And what are you... Sorry, Prashant, also on the road ahead as well, right? April has been a strong month for you, both on the premiums front, on the APE front as well. For the first, do you expect this trend to continue, say for the first quarter and then going into FY26 as well?
As CEO, we actually love when we begin the year strong, because that really paves the way for a stronger year. And, well begun is half done, as they say. So we started well. But I must highlight a few things. While our growth was robust, this is the smallest month. April is the smallest month. So there's a lot to focus on. What we can confirm is our execution will be of a superior order. We are starting the year with positive momentum. So one would hope that this positivity will continue. Some of the early indicators in May are also very promising. But I must highlight that, I think the peg will be how the industry grows. We are in the industry. We are not outside. And hence, the overall momentum on the industry will be one big determinant of how Max Financial Services or Axis Max Life Insurance grows. Again, I'll repeat that we will try to maintain higher growth than private industry average, and we'll try to gain market share as we go along.
All right, Prashant, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Yash, thank you for stepping in as well. We'll take a short break. On the other side, we discuss market technicals. Sneha Snate of Angel One joins in, and she also shares some top trading ideas. Stay tuned.